Well, the RBA are going to raise rates next week, in my opinion. I think most people expect that. The rates market priced it at a 75% probability of a 25 basis point hike. The economist community, 20 out of 21, see a 25 basis point hike as well. But in my opinion, that will cap the move that we've been seeing from 3.6% earlier in the year. Now, the market, if we look at swaps pricing, still believes we're going to see another rate hike coming through between August and September, and that's where things will settle out. But I think that's misplaced. And how do I manage that situation? Well, I think we're going to see peak growth coming through in that Q1 GDP number that comes out on the 3rd of June. We're expecting GDP at 2.6%, personal consumption at 2.3% year on year, and government consumption running around 3.6%. Very healthy numbers, but that's the peak. Things start slowing. We're going to see demand dissipating into the quarters. And by December, we should see personal consumption running at 1.2%, taking the growth rate of the country down to about 1.5%. So slowing, not recession, but certainly slowing in terms of demand as rising cost of capital. What we're seeing in the Straits of Hormuz continues to be closed. And of course, food and energy prices, seeing that cost of living continue to be very high. Now, the RBA have been very cognizant of that situation. And whilst I expect them to raise rates next week, we will see a much more cautious stance from the statement. And I think in terms of the voting, we'll see 5 looking to raise rates and 4 leaving it on hold. So again, a very much a split decision. And that will lead a cautious decision to suggest that they're going to be going on hold for a period of time. I think that rates pricing is a little bit misplaced. And as that demand starts to fall, I think the RBA will be pretty confident to sit on their hands for the time being. Now, what does that mean for markets in Australia? Well, we have seen earnings in Australia, consensus earnings for the ASX next year taking down about 3% in the last 4 weeks to $5.36 in terms of EPS. That's still a pretty decent number, but you are seeing some slowing of earnings expectations, and we have seen domestic cyclicals really underperforming. Most of the outperformance have come from materials and energy stocks, which won't surprise. Banks are fairly flat, up 3% on the index. A bit more on the total return, but certainly domestic cyclicals have underperformed. The Aussie dollar's been a stalwart this year. It's been a fantastic trade, but the most of that's down to risk factors and terms of trade and other factors. But as we see a slowing economy, we'll probably see slowing economies in other markets as well. So relative growth rates should stay fairly straightforward, and I think we'll still see some whippy moves coming through in the Aussie dollar, not just a relative rate story. So what we are seeing is a situation where I think RBA will raise rates. I think that will be the last hike there, and we'll start seeing a slowing economy going into the end of the year. And I think the statement will be pretty cautious to that fact there as well.